Hi, everyone. This is the HodlCast. Today is August 16th, and I have a very special guest that I met on Twitter last week. He wrote an amazing article kind of going over the state of the markets with ICOs. It's posted on Steemit, and the link is right here in the bio. But Sean, if you could maybe give a little background of yourself and how you got involved with cryptocurrency.
Hello, everyone. Sure. So I want to start why I'm here today on your show and then just telling you how I came into crypto, right? Let's start. In June, I published this article where I provide a standpoint on why most token sales are non-compliant and therefore face the threat of being either shut down or would at least have to pay penalty fees. So I wrote a legal standpoint, although I'm not a lawyer. Let me explain that. I studied at the University of Bayreuth in Germany, which you can probably hear. And in a few months, I will be done with my master's degree in finance, accounting, controlling, and taxation.
Oh, wow.
Next to my studies, I work for a professor. Then I'm also a tutor in accounting, and I give lectures at another university in various subjects. So it's quite something to do. I also was offered a PhD position, so I guess I'm not the most stupid one of my profession. But my ultimate goal is to become a certified public accountant, CPA, and also a tax advisor.
Holy, I
So
had no idea I was getting such a professional on here. I'm so grateful to have your expertise and insight here.
thanks. So I'm one of 6 peers at our university that already took 2 of 5 sections of the CPA exam that you would usually do after having worked like 5 years in the audit space.
Hmm.
So one of the sections was economic law. Hence, I studied various law subjects, including capital markets law, and also learned a lot of like financial markets kind of regulation stuff. Then I think it was June when the SEC published a speech of one of its directors. It was about whether Bitcoin and ETH, as of now, are classified as securities under the US Securities Act of 1933. So after having read this, I came along the Howey test, which I've heard many times before. So I wanted to finally understand it, read the original case, and did some more research about it in connection, of course, to cryptocurrencies. For example, I also conducted research about the DAO and the Munchie case, which was awesome, and finally derived my own opinion about the published SEC speech and wrote this article that you read.
Hmm.
So I made a lot of effort to explain it in very simple terms so everyone can grasp it. I mean, look, when trying to understand crypto, you realize that with blockchains, people can construct their own systems of rules solely enforced by a protocol. So they basically create order without law and often ignore legal barriers by simply using code. So
Oh, wow,
that
I like
blows my
that.
mind.
Order without law. Yeah.
Yeah, that just blows my mind and made me think about crypto and regulation in general. So, as I'm reading about crypto every day, I also started to use Twitter. I haven't used it before of my kind of crypto experience. So I also follow
What's
you, of course, and all of this Tone Ways clan, I would call it. And there was really cool thing to see there. So I guess you saw that I tweeted my article as a comment, and now you invited me to a podcast, which is absolutely amazing for me.
well, I'm really glad to have you here. Can you tell everyone your Twitter handle in case they want to follow you as well?
Uh, I think when I tell you, you won't probably understand because it's like a German sentence, but I can try. So it's Mann im Mond, MANNIMMOND. I think we'll probably just leave it in the comment section or something like this.
I'll put it in the title.
Yeah, regarding how I came into crypto, I can tell you that I first heard about Bitcoin in 2012. So as I'm always curious about, trying out new things, I just registered at a German Bitcoin exchange. It was the only one we had back then, and it didn't even require KYC or MLA procedures like we have today. So
Back
of
in the good
course,
old days before all this KYC.
yeah, yeah, that was like you could like buy your Bitcoin in just like 2 minutes, and you didn't even have a set up account before. So it was like so fast.
Hmm.
Um, but of course, I knew that at that time, the predominant use of Bitcoin was for dark web activities, right? So curious as I am, I kind of explored the dark web, of course, solely for educational purposes. And I got pretty overwhelmed about what I saw there. Like marketplaces for drugs, of course, they are the most boring ones, I think. So, way more interestingly, I remember a group called the White Wolves that you could hire for assassinations. And even more shocking was that they had like a menu with prices for their services. So these prices distinguish between the social rank of the target. So I remember it ranged from a normal person to celebrities and even politicians.
Oh,
So that
wow.
was a really crazy time that I saw there. And then, like 1 year later, my belief in Bitcoin had strongly intensified. So that was when the well-known dark web marketplace Silk Road was shut down by the FBI, I think in October 2013. And I thought, okay, that was it now. Uh, Now Bitcoin is going to zero, but it didn't fall. So I got really surprised and thought that there is much more to know about Bitcoin. So, bubbles, when they burst, they go to zero, right? So
Mhm.
Bitcoin to me is everything, but it's not a bubble. So of course there is like speculation going on, but for me this is like terms of price finding because it's kind of new, so we need some time just to figure out how to measure the price discovery and things like that.
Hmm. And
So
you
then the next step,
oh, keep going. Sorry, I didn't mean to
yeah,
interrupt.
the next step after the Silk Road event, I started to research more about cryptocurrencies in general. So I read like several books, for example, Blockchain Revolution by the Tapscots, Internet of Money by Andreas Antonopoulos, Blockchain and the Law by Felipe and Wright, and also did a lot of research on the web, like watching streamed blockchain events or just listening to podcasts like yours. And furthermore, I also did some massive open online courses about blockchain and crypto in general. So then the last step, I think November last year, I went to one of my professors and suggested that I want to write about the accounting status of cryptocurrencies. So we sat down. He gave me a topic, and I was the first one at his chair who wrote an academic paper about crypto. So, as I also was a tutor in accounting for his chair, I also attended his lectures. And what amazed me was that he mentioned cryptocurrencies and ICOs in one of his lectures. So I kind of made an impact with my paper because the audience of him is like 900 people.
Oh, wow. Yes, you did.
So yeah, so I really think that, I mean, this is kind of naive to say, but I think we are very close to adoption as crypto knowledge gets shared over more and more channels. Like, for example, just recently I noticed another kind of development. So we have one very traditional news channel on German TV, and it shows you at the very bottom like price indices like stocks, gold, and oil. And now they also added Bitcoin. And also in 2018, I saw like three or more documentary movies about crypto in our free TV. So I guess we're very, very close. And I try to like give my piece to the crypto community just by sharing knowledge. You know, as I'm also a lecturer at another university, I decided to add ICOs to the finance topic section. So I teach my students about ICOs, like that they know it's a new way of getting early stage funding and so on. So this is like where I see myself. Yeah, but also because I don't work in the space, I think I can like give you a very neutral and objective way to your podcast. You know.
Oh, that's excellent. Well, yeah, I had no idea. I knew just from reading your article that you must have had some pretty intense background in crypto because, like I said, it's one of the best things I've ever read about it. But now that you explain it, I kind of understand more. So
Yeah,
glad to
thanks.
have you here, and thank you. And just you said you were on the dark web and stuff. That's pretty scary about what was going on there. But
Yeah, indeed.
it seems so there were a lot of different websites though, and I think the Silk Road one got a lot of negative press for some of the things that were happening on different dark web areas. And poor Ross, well, everyone has their own opinion, but I think he got a really harsh sentence for making an open marketplace. But yeah, I'm pretty involved. Well, I'm getting more and more up to speed on that case. As we move along, they have 1 year left to file. It's the last motion that they can make at 2255 that has to show that the first attorney that handled the trial and the appeal made some vital mistakes that could have led to a different outcome if those mistakes weren't made. And when you go through it, there were actually a lot of mistakes around the expert witnesses. Like he didn't object to the experts that were giving information on the FBI side, and those witnesses gave wrong information. And he tried to get Andreas Antonopoulos to be an expert witness on Ross's behalf to explain Bitcoin to the jury. But when he submitted the application for Andreas to be the expert, he linked to Andreas's like way old, out of date LinkedIn page. So no one saw that Andreas was actually an expert, and Andreas at the time had an updated LinkedIn page, but just, out of carelessness or whatever it was, the wrong information was submitted, and they decided Andreas wasn't a good expert. But had Andreas been there, he could have rebutted the information that was coming out from the FBI side. And then some of the anyway, there's a lot of things. I have a call with his mom later today to go over. We're kind of putting a draft together for that motion, and then she's going to hire, a big fancy law firm that will take it to the finish line. But
yeah, sure.
but
Okay.
yeah, anyway, that's a whole other topic. But it was interesting that you brought it up. I never went on the dark web myself. I don't even know how to get onto it. Actually, probably shouldn't say that.
Yeah.
I think it's not that hard.
I mean, this is like the next big thing. So you're like using the Tor browser, but it doesn't use like normal URLs. So you actually need to know the address on the Onion network before you can actually start to go on these pages. So where do you actually get these kind of URLs? It's like it's a secret in itself.
Yeah. Well, I guess let's focus more on the article than getting onto the dark web. But it's really fascinating subject too. There's so many intricacies around cryptocurrency that, that's I think what makes it so fun for everyone getting involved and learning about it. But in your article, you said that you see crypto as being one of the fundamental driving forces for the fourth industrial revolution. And that was, the first time I heard anyone talk about that, and I was wondering if you could kind of elaborate on it.
Yeah, sure. So kind of historically, there have been like three major changes in the industrial sector. So These changes were driven either by inventions or by a kind of technologies, and they led to fundamental transformations in terms that you could now provide more efficient kind of production. So the first industrial revolution was caused by the invention of the steam engine. I think it was the 18th century.
Mm-hmm.
So mechanical devices like weaving looms could now be used more efficiently. Then the second revolution was driven by electricity at the end of 19th century. So now you could have like mass production. And then the third industrial revolution started in, should be 1970s, something like that, and emerged due to just the computerization using electronic engineering and IT. So gradually, you could start to automate production processes. And as of speaking right now, we are living in the middle of the ongoing fourth industrial revolution. So I understand it as the cross-linking of value creation processes beyond corporate borders. And it includes, for example, the networking of devices, making decisions based on data analytics, and of course also blockchain and crypto. So where do I see crypto? I see it in between the the development of the World Wide Web cycle. So we started with Web 0.0 with just information. Then we went to Web 2.0 with social media. And of course, as this led to monopoly-like platforms, we are now able to disintermediate trust by relying on blockchain technology and using cryptocurrencies. So why is this useful? Economic theory teaches, like I learned it, that a monopoly situation leads to market failure because it prevents efficient allocation of resources. So disintermediating these powerful platforms is actually enormous. So you don't want monopolies except for public goods and services. And blockchain technology, together with cryptocurrencies, enable you to transact in a trustless manner without these intermediaries. And in my opinion, this is why crypto and blockchain will drive the fourth industrial revolution. How does that sound?
Oh, very good. I like that about the monopolies. Although I worry a little bit that when you look at the people that hold the Bitcoin, it's still kind of held by, I've seen some charts anyway that show that the same way that 1% of the population globally has like 97% of the fiat currency, or whatever the percentages are, it's the same way spread out with Bitcoin, where only a few people hold the bulk of it. But that doesn't mean that those people are monopolies, I suppose. And in America, it's starting to get, so we have a couple companies, the Coinbases and the Bittrex and Binance. Well, that's not in America, but some of the bigger companies might be starting to look a little bit like monopoly as well. But I suppose with Bitcoin, that's people's choice. Like, they don't have to use those exchanges, or there was a way to get Bitcoin, as you kind of mentioned earlier. Before, it was really easy to get Bitcoin, and now it's becoming harder and harder with all of the KYC regulations, and people were able to still buy it anonymously using local Bitcoins if they were doing smaller size transactions. But now even that looks like they're starting to move towards requiring KYC information. So not that having the KYC information means that it's a monopoly, but it changes the anonymity side of it, which I think was designed originally as one of the biggest components of Bitcoin, being censorship resistant.
Yeah, true. I mean, for me, it's all about this kind of new way of transacting with someone that you don't actually know. So it wasn't like possible before. So this is what, for example, Andreas Antonopoulos calls it. This is the Internet of Money, right?
Right. Yeah.
And this is what we didn't have before. So this is what I think is like really, really cool. Sure, it's like shocking that like the kind of Gini coefficient is like not that well equally distributed. But for me, I think I read many times that Bitcoin was actually designed that you kind of incentivize the people who are like the early adopters. And yeah, so this is where we are in right now.
Mm-hmm. Yeah, it's so funny. Everyone always says when they got into Bitcoin, they felt like they were late, even if it was in 2013 or 2014, it felt like there was already a lot of people here, but I think we're still in the very early stages. So
Yeah,
anyone can
yeah,
come in now and
absolutely.
still be an early adopter.
Absolutely.
Hmm. Especially with the bear market we've just had, it's kind of nice in a way that other new people can still get in before, when it went up to 20,000, it's pretty hard to buy in at that price, but now it's a good buying opportunity again for people. And in your article, just the way that you wrote the explanation of Bitcoin and blockchain, you did it in a few sentences and it made total sense. And I was wondering if you could just kind of explain that to anyone listening. That I think most of the people listening probably know what it is, but it's still something that I know I certainly appreciate. And I think anyone that's in the space or new will appreciate just a really clear explanation of it. So if you don't mind giving us your explanation of what they are.
Yeah, sure. So it took me many years that I can explain it like that, and this is also the way how I describe it in my classes and how I described it, for example. So what is this? Okay, am I muted? Hello?
I meant to mute myself so that
Okay,
I didn't have any
all
background.
right, got it. So imagine a paper book that you use to write down notes. Let's call it a notebook. And now let's assume everybody has such a notebook. And now the magic kicks in. So as soon as anybody writes down his notes into his notebook, this information gets reflected in everyone's notebook. And moreover, nobody can edit or remove the information. Okay, so let's translate this logic to the blockchain concept. So a blockchain is this notebook that stores information about transactions or a certain status of a contract. So that data gets stored in so-called blocks, which you can imagine as one page of the notebook. And the blocks are somehow interconnected. So each block at some point of time refers to the previous blocks, and when a new block gets added, it is the basis of that new added block. So this interconnection is done by using cryptography, which is a discipline of like the broader science of cryptology. And cryptographers secure data, for example, encrypting messages. So listen, but before a block gets added, it has to get validated because there is no central authority for this job. So this validation process makes sure that the transactions are legit because there is no central authority. So you can imagine the validation as being the bondage of your notebook, like the thing on the side. So it ensures that pages don't fall apart. And now let's assume that there's a malicious player who wants to change something. Remember, we said it's a magic notebook where nobody can edit or remove the stored information. So then this tamper attempt would simply get rejected by the validators because this is their job. So putting it all together, A blockchain, in my words, is a decentralized distributed database. And in case the blockchain is open and permissionless, meaning that everybody is allowed to participate, cryptocurrencies serve as an extrinsic motivation factor for the validators to validate their transaction, right? Because they get a fraction of the cryptocurrency and they can sell it on a secondary market. Besides of this, a cryptocurrency could also reflect like any underlying value. So this underlying can then get transferred between transaction parties just using a blockchain. And the advantage is that the transaction gets stored forever in the blockchain, and you can just transfer any value without the need of some scammy intermediary that you need to trust. So you just rely on a blockchain. And my last interesting fact that I want to share about this kind of topic is that the concept of crypto is nothing new. It dates back to the cypherpunk movement, which happened which is happening since many decades ago. So cypherpunks, as I grasp them in very simple terms, they advocate privacy enhancing technologies. And what I found is that one well-known member of this movement is called Timothy May. And I read something that in 1992 he published some kind of a statement. It was called Crypto Anarchist Manifesto. I don't know if you saw it. And I encourage everyone to read it, because it only takes 2 minutes, and I guarantee it will just blow your mind. So it's originally, I think, dates back to even longer time ago, late 80s. And the amazing fact is that in these old times, he describes a world that is so close to the situation that we are currently at with our cryptocurrencies. So the key aspects that he illustrates there are that there will be a technology that enables trustless transactions, and that the government will try to slow or halt the spread of this technology. And the government would do so by citing national security concerns, and that drug dealers and tax evaders are using the technology. So you have to shut it down.
Wow.
And I mean, seriously, this is a very accurate description in my view. I mean, this when I saw it, I thought how could he write it back in 88, and this is so much we're seeing right now.
Oh, I'll have to. I wish I had read it so I could comment, but I haven't read it myself, so I'll have to find it and put it in the link here as well. But yeah,
I will send you that.
Okay, thank you. Yeah. It's so interesting. I'm in some chats where the people suggest that maybe the government or the CIA is who started Bitcoin, that they're Satoshi, and they want the technology so that they can actually surveil and, get an even greater surveillance on every single transaction. But I don't believe that myself. I think, we do, and especially with Lightning and side chains and things like that, there are still ways to keep the transactions anonymous and, like you said, trustless. So it's, I don't think it can ever be stopped. And the fact that it's global like it is, no one government can try and control it. And even if they do try and say, oh, you can't use this, or, it's only used by these, for nefarious activities, it's not something that can really be stopped because of the way that you described the blockchain there.
Yeah, I mean, in the case that you don't have a centralized kind of legal entity behind a project, you cannot shut it down. you would have to try to shut down all of the internet service providers, or you like try to regulate like the end user. But something like Bitcoin, where you don't have like a major big corporation like standing behind, I don't see a point how to shut it down.
Mm-hmm. Yeah, and like you said, they'll just try and regulate it or on the tax side and different things, but they can regulate all the ICOs as you know as we're going to get into. But
Yeah,
Bitcoin,
sure.
they can,
And also they kind of should regulate them.
yeah. So also in your article, you talked about that blockchain 2.0. What do you make of that?
Yeah. Okay. So, like the first step of the blockchain development, it was started with Bitcoin, as we know, and was the decentralization of money and payments. So then, blockchain 2.0 is like trying to decentralize markets more generally. That is best understood with those smart contracts, right? So typically blockchain 2.0 is like connected to smart contracts. So now you can not only transfer cryptocurrencies as a means of payment, you can now start to represent any underlying value that you want and transfer its ownership without the need of a trusted intermediary. So this is how I see a blockchain 2.0.
Mm-hmm.
And this is where we are currently at, and we should admit that we're a little bit away from mass adoption. I mean, everybody is talking about it since years, but nobody actually uses cryptocurrencies. But of course, we should not forget that most of the promised stuff hasn't been fully built yet. So I think it's a little bit more time that we have to wait, and then we will see what comes out of it. But in my view, as of right now, the predominant utility of crypto is its store of value, which is a great utility when you think about it, but it's not like the intended usage that those projects promise to kind of deliver.
And
And also,
do you think we'll get there with those intended projects like real estate and medical records and things like that
yeah,
going on the blockchain?
well,
It's kind of
I
hard to put a physical thing on the blockchain. You just have to have something that represents that physical thing. So I wonder if it's a digital thing, sure, it can go on the blockchain. But putting the physical stuff, there's always going to be the question of, well, if the actual physical thing gets in a different hand than the person who has the digital token representing the physical thing, how do you rectify that? And I think that's one of the big challenges around like putting art or real estate or medical records onto it.
yeah, I mean, I totally kind of agree. So I think like the decentralization of money is useful because we see that it works with just with Bitcoin.
Mm-hmm.
But I keep asking myself, like, what intensity of decentralization actually makes sense for a real world scenario? And I don't know the answer, but I really liked what I think it was Tone Ways in one of his last videos, I think last week or something like that. And he explained that you have like two extreme situations. So the most simple use case of a smart contract, like I said, this would be blockchain 2.0. Like the most simple use case is a vending machine. So imagine a machine that offers drinks. So once you insert a coin, the machine will give you your drink.
God,
So
I
that's a
imagine this
very,
every
very,
time I walk by
yeah.
a vending machine since many years now. I just wish it would
Yeah, this is a
go
smart contract, right?
by.
Actually, it is. Yeah. So, but thus the status of this smart contract needs to be stored on a distributed network, meaning nodes validate and store the data, rather not, right?
Mm-hmm.
And then Tone said there's a second extreme scenario, and this is the decentralization of these kind of what was it called with Augur? They did this
Oh, yeah.
assassination markets, right?
Yeah, yeah.
So there it makes sense that you try to decentralize it, but you don't want that to happen. So it's really hard to see like a use case where decentralization makes sense. But I think that we already saw that money and payments is a nice use case for it.
Mm-hmm. I agree. Yeah. And who knows what the next decade will bring. Right now, all the things that look challenging or impossible, the human ingenuity is nothing to balk at, and solutions will, I think, get developed over time. Um, so yeah, I don't think it will. A lot of people say, oh, the only use case for cryptocurrency is the store of value or moving money, using the blockchain. But when you go to these conferences and you see such a craze of people there trying to do
Yeah.
other type things, some people say it's, they're just after the money, but I think there's got to be more to it than just the get rich quick nature of ICOs. But I don't know. I wasn't around for the internet craze, and apparently those conferences had a similar feel to it during the .com days. I mean, I was around, I was alive, but I wasn't at the .com conferences. But apparently they were just as popular in the late '90s. So, but some of
Yeah.
those companies came around, and there's been a lot who, in late '90s, I wonder if we would have imagined you and I meeting on Twitter and, a few days later having this conversation. So only good can come of it, I think. So do you think that the ICOs have a chance to disrupt corporate financing?
Okay. What is corporate finance, right?
I think
Like,
when I say I think of it like the initial public offerings or the traditional stock market.
okay, so then I'm thinking about crowdfunding. So on a broader perspective, it's used also for financing the early stage capital demand for a project or a startup.
Mm-hmm.
And this is done by typically gathering like small amounts of money by just a large group of people. So that's why it's called crowd. And the main kind of difference is that ICO people in the early times didn't have to deal with an intermediary. So instead, they had just to send their Bitcoin or ETH to a public address, and a smart contract then would automatically entitle them the tokens.
Mm-hmm.
So nowadays, as crypto got bigger and bigger, they require AML, KYC processes. So the ease of participating is actually worse than dealing with an intermediary for some kind of crowdfunding project.
Yeah.
And also, like, I actually wanted to participate in one ICO myself, where you also had to disclose very personal information. For example, I had to scan my annual tax filing, and then I ultimately took the decision not to participate because it doesn't make sense that they have my tax filing.
And you know
Just
what's funny about that? The companies that are doing that, they're trying to comply with certain, regulations that they have to know their customer. But in certain European countries, it's illegal to ask for that information. So we're dealing on a global level. And in America, the laws are very different in terms of what information you can collect from the citizens compared to Europe. Europe outlaws collecting your passport or things like that because, you can't trust who's storing it. These ICO companies are not internet storage security companies. That's not their business. And So it's very strange trying to navigate if you're doing a global offering, what each, they should have looked and seen that you're from Germany and known that they shouldn't be able to collect that information from you. But if you had listed that you were from America, yes, they would have to collect that information from you.
Okay, cool. Yeah. Will it reinvent, or will it kind of disrupt crowdfunding or VC? I mean, I don't know anyone who participated in a crowdfunding, but I do know people that participate in the initial coin offerings. So I think for like a tech-savvy startup, it's like a new way of getting early stage funding, and this also in a global manner. So I see that it really has the kind of potential to disrupt like the traditional crowdfunding. Yeah.
Mm-hmm. It does, but do you think it incentivizes the ICO project owners or the people that are taking the money in to build a good product when they get all the money up front?
No, actually, I think an ICO incentivizes the founders to exit scam.
Yeah, I agree.
Yeah, I mean, they if they see, okay, now I raised like so much Bitcoin and ETH, I can just sell it and have a nice life, right? And
Mhm.
no one would actually care. So you could not take legal steps against them because they didn't build it. It's not
Mhm.
possible.
Yeah, and I think a lot of people, if they're new to this space, when they were buying the ICOs, I don't know if they understood that they were just getting tokens that had no corresponding, claim to the company's profits. I think people thought they were buying things that acted like stocks and would go up in value if the company was successful. Or there was, there's some that's what we're used to. If when you're buying something like this and they look a lot, or the way it looks on these exchanges and stuff, it feels a lot like you're getting a stock, but you're getting really nothing for the token except what the perceived value is on the exchange. And I think we're seeing some of that with this altcoin Armageddon or whatever people are calling it right now. And I think
Yes,
some are
true.
coming out with security tokens, and those might they at least have some kind of legal tie to what the company is, but you can't sell them on a typical crypto exchange. So it's kind of in a
Yeah,
weird.
so I mean, if you try to differentiate between investing in stocks and putting your money into a token, it's much more easy to invest in a token.
Hmm.
Because I don't know like a 14-year-old buying stocks, but I do know 14-year-olds buying a token. So it's so much more easier, and therefore it's like this a kind of feeling of gambling here.
Absolutely, yeah. But they're making it. Like now, I don't know how do they deal with it on a tax level in Europe, because here they're starting to here in America they're starting to say that all the exchanges are going to have to give 1099s and people are going to have to pay tax on it. It was a long time a question of whether a like kind trade, like once it's in crypto, if only pay tax when you sell back to fiat. I don't think that was ever there. It was just something that people decided was the way that it was.
That
But
would be
the
beautiful,
original
but it's not like
definition
this.
mhm,
Yeah.
called it any kind of virtual currency. So really, but it's really difficult to calculate your back taxes on things because, if it were a stock and you moved it between one exchange to the other exchange, that would be a like kind, or not like kind, but you wouldn't have any taxable event because you still hold that stock. And only when you sell that stock would you get a taxable event. But the way that each exchange is counting it here, if you link in the API key, it's showing that you sold that Bitcoin, if you moved it from Coinbase to a like Binance, that would be considered a sell, and then a buy on Binance, and it's all a big mess to go back. And some people last year, when the when it was in the heyday, were trading thousands of trades a day, probably some 14-year-olds, and it's a real nightmare to now try and go back and figure out the stock, your cost basis and sale price on everything, and then convert it into US dollars and then report that to the IRS. Whereas if you're dealing with a stock, the company will send you a nice clean 1099 at the end of the year telling you what your trades were. So
yeah. So what I saw there is that I am in one kind of Telegram group. It has around, I think, almost 7,000 people. So these are all people from here, Germany. And like so many of them don't actually care to file their kind of crypto profits, right?
mm-hmm.
So if you go through the chat, it's actually so funny because they're like saying, I don't care about my tax filings. I will never tell them what I made. But I mean, it's like just a matter of time until they have all of this software kind of thing where they then can like monitor how much everyone made, right?
Exactly. And they're in I think they're in the Telegram groups, posing as other people and, collecting all your data off that too.
Yeah, I mean, I think that actually in those groups there are maybe some guys from the state government too.
Mm-hmm.
So they actually like take like screenshots or something like this. Maybe
that's what I think as well. Mm-hmm. But so people should be very careful. I think the best answer, if anyone asks how much Bitcoin you have, is to say none. I don't have any of that cryptocurrency yet. What is it?
Yeah,
Just
sure.
kidding. Or just keep track of it and pay it properly, or don't trade. Once you buy Bitcoin, if you don't sell it, then there's no taxable event on that. That's the easiest way to do it, I think.
Yeah, I would actually never sell it, so you don't have to worry about it, right?
Yeah. And in your blog, you had some great numbers there. You stated that 13.89 billion US was raised by the end of May. So I think we kind of, I wanted to just go through that and, talk about what you think happened to that money. Like, where did it go? Did the entrepreneurs that raise it spend it wisely? And I was wondering if you knew where that money went in terms of geography, like what countries are the biggest ICO whales. But I don't know. I've never found that. I've never found the numbers that break it down by country, and I don't know if they exist because a lot of the ICOs are just more anonymous. So I was just curious if you've come across that, but I don't know if it's possible to.
Yeah. So where do they spend their money that they raise, right? I think it was last week where there was some kind of news, and it said that all these ICOs are dumping on their ETH.
Mm-hmm.
And this was like what they said that caused this huge ETH price crash, right? So it shows me that they actually haven't spent everything. So there's something like a lockout period. And, maybe the funds they get to a smart contract, and then only a fraction of this gets to the founders. So I don't know about that, but I only saw like many white papers, and so I just know what they tell you how they want to use it for. And what worries me the most, or what is the most stupid that I think, is that like most of the raised capital is going to the funders.
Mm-hmm.
So I think this is like This is so stupid because it makes a project like so centralized and also poses like substantial threats because they can just dump it when it has a certain value and then leave and don't make their promised project. So I have no idea how they're spending it, but I think that they're not taking very wise steps because they lock it for the founders just to get rich, I guess.
Mm-hmm.
And then you asked what percentage is coming from what country. I haven't seen any numbers, so I don't think there's any numbers out there. But I only saw like numbers where or in which country you have the most conducted ICOs. And in Q1 of 2018, I think the first one was the US, and then UK, Singapore, and eventually Switzerland. So yeah, but I don't know like actually numbers for what kind of nationality are they that
That are
engage.
investing in them.
Yeah.
Mm-hmm. I think a lot is American, but I think, well, who knows? It's easy to think that when you're here in America. It's like, oh, everything is centralized here in America. But I think they do have a big appetite for ICOs here, and then probably China, India. It probably follows, the population of places, how much money they're investing in it. Um, but I wonder if countries where their own government currency, like, they talk about Venezuela and places like that, where they've seen the central banks or the government currency have a ton of inflation, that they've moved more to Bitcoin. But I wonder if that corresponds to ICO purchases or not, or if they're two like completely different animals, which hopefully they are. But yeah. And then, so you did a great example of the Howey test when you went through it as well. And the Howey test is something, I first started hearing about it with that Dow case last summer when the SEC used it to define the Dow as a security. And, we've seen it used in the Munchie analysis. And recently we had a case in Florida where they deemed that Centra, that ICO that was, promoted by Floyd Mayweather and DJ Khaled, the Florida class action case, the judge said it was a security, used the Howey analysis. And that was the first case that I'm aware of that's actually on the books, written in law as being a security. And it had terrible facts around it. Like, it was clearly a scam, and the owners did a lot of fraudulent things. They used fake people in their white paper saying that they were advisors, and they never even had a product. And interestingly, they said that they would have an 8% dividend, which made it really clearly a security, in my opinion. Like, I think this Howey test, which we'll go through, it leaves it up for a lot of different interpretations, whereas my understanding is that Europe uses a different test that just looks at whether or not someone is paying a dividend or acting, giving you some kind of ownership stake in the company like a traditional stock would. And I think that's probably a better test. And on that test, the Centra ICO would have failed too. But what do you think of the Howey test?
Well, you see that we have not a case law system. So it's not that we have to look at like these cases. So we have like very hard prongs.
What do you mean
And
there's no case law? I'm sorry. I come from Canada where we're on, they use case law as well. So you guys in Germany, it would just have, they give you the prongs and that's it?
yeah, yeah,
Oh, wow.
yeah. Basically, it is called like we have some kind of overriding fundamentals. So in case that it's hard to determine if the prong is met, then you can therefore rely on these fundamentals. But actually, you do the most kind of legal assassination determination just by looking at the prongs, and they are like very hard facts, so it's actually easy to know if it's met or if it's not met.
Oh, wow. So are there a lot less lawyers there than here, I wonder, because they wouldn't, here the whole job of the lawyer is to find, some loophole or way to make the facts look different than the reality to zealously represent their client. They can interpret the different cases in so many different ways. So it's not, nothing is clear cut in the law. It would seem if it's a lot more clear and they just have the prongs and look at the prongs, and there would be a lot less need for attorneys.
Well, the thing is that the German oversight body for our financial markets, they took steps that made it not so clear, because they said that with every token, with every coin, you have to do a case by case view. So actually, you don't have any token sales that are done from here because no one wants to do it. I think now in 2018 there have been, I don't know, like 1 or 2 token sales, so that's not that much. So they are like very afraid of actually dealing with it.
So what kind of, do they use these same Howey prongs, or what kind of prongs would they look at for it?
There is four hard facts. Like one is that the asset, no, they are trying to see is this thing a security, or is it more like a utility, right? So it's a security if it's transferable, if it's negotiable, if it's standardized, and if it's other instruments of payment. So it's not exactly the same as in your test,
But kind of
um,
comparable, because
yeah,
the
a
last
little bit.
prong, if they say it's if you can't use it as a payment, as a way to pay for something, then it wouldn't be a security. And in ours, it's if it's not based on the third party's work, it's not a security. So everyone here has tried to create ways to like gamify their ICO to make it so that there's a big crowd contribution of it, so they can say, oh, the success is not from one party's efforts, it's from the group's effort. Well, there they probably say, well, you can use this to pay for, part of the product, like if, whatever the ICO product is, and try and get out of the security classification through that one.
I only know that I read articles by legal scholars, and they say that if you have like a pure currency token or a pure uh, utility token, then it's not a security. So they see that it's very, very clear, but obviously no one wants to do some kind of a token sale, so it seems that it's not that clear.
Mm-hmm. And what are the penalties from the government there if you do sell an unregistered security?
About the penalties, I don't want to say anything because I didn't
Sure.
look
Yeah,
at
it's
this.
kind of a random question. It's
Yeah,
just
yeah,
curious. It's probably
I
a
don't have
fine.
idea.
Uh,
Yeah,
I
maybe.
don't know. Here they can send you to jail if you've done fraud, securities fraud, which is a pretty general thing that they can use to get you in that classification. It's just if you basically misled the investors, or you did a pump and dump, like by telling some fake news about a product and then selling your own shares of it, while other people, you say, oh, this is going to go up for whatever reason, and then sell your own shares after it goes up. That can get you into the fraud side of it. But otherwise, if it's just the civil penalties, they're pretty big fines. You get fined for every sale, like every unregistered sale. So if you had 30,000 people that bought into the ICO, you could technically get charged 30,000 times with unregistered sale. And each fine, they have a classification of 3 different levels. I don't have it in front of me. I haven't looked at it in a while, but I think it starts at 5,000 and goes up to 60,000 or somewhere in those range. So it's a pretty serious if they get
Yeah.
it. But so far, the first thing they do is just make you give the money back. If you weren't super fraudulent with it, you just did it without registering.
Well, I think the most serious legal consequence of being classified as a security is that, of course, first if they want to do some kind of a token sale, they need to register, and then they need to create a prospectus, so to reduce information asymmetry. And exchanges, if they want to trade these tokens that are classified as a security, they also need a registration, and then they have to monitor for market manipulation. So I think in crypto, this would get a little bit hard for them.
Mm-hmm. Yeah, it's pretty hard to monitor for the market manipulation.
Yeah,
But they do it in the
exactly.
stock market, so there's got to be a way to figure it out here. But I don't know if I feel like a lot of people are attracted to the ICO market because it's different than the stock market in that respect. So, and then, so the SEC, they often talk about the economic realities of the transaction. Like they're talking about whether or not it's a security, you have to look at the economic realities of what's happening with respect to the Howey test. What do you think they mean by that term?
Okay. So economic reality, right? It's a means to prevent intended abuse of legal standards to your kind of advantage. So I want to give you an example from accounting. So a corporation that has a certain size must publicly disclose its financial statements. So in case of a global operating company, the financial statement consists of all subsidiaries that are controlled by the reporting mother company. So now imagine a balance sheet. It reveals how you allocated your resources and how you are financed. So creditors like banks rely on these statements in order to determine if you are solvent enough so they can give you a loan. Now further imagine a company with a very bad debt ratio, so nobody wants to do business with that company. What creative accountants, like the ones working for Enron, did was pretending to be magicians, right? Because they made their debts disappear. Remember, I said that the mother company has to consolidate the financial statements of their globally controlled subsidiaries. So they established new companies, transferred the debts that they wanted to vanish from their statements, and designed those new companies in a way that they didn't have to consolidate them because they simply pretended not to control them. So this is where the legal assessment requires economic reality. Regarding the ICO security classification, it means that token sales, they need to be analyzed regardless of any wording in the sales contract. Not the contract itself is analyzed, so moreover, the way it is sold. I mean, in the Howey case, the underlying asset, these oranges, they are not a security. What made it a security was the way they were sold. And this is the same thing with token sales. So as I said earlier, and also this is what I argue in my article, as the promised product or network hasn't been fully deployed yet, and the US market is kind of targeted, then the token sale will be classified as an investment contract because it's like meets all these prongs, and therefore will be classified as a security, right? So all the relevant legal consequences follow. So they have to register, or they have to seek for an exemption and all that stuff. And here also, as I said, the exchanges would have to look for a registration as well if they want to trade it. And as I said, they have to monitor for market manipulation. So this is what's it. So you just have to look like the way it is sold, and then it tells you like how you have to see it in legal language.
Yeah, I agree. Now, what do you think? So I think it's been said enough by the SEC that when you do a typical ICO, especially like you just described, when the product's not built yet, you are depending on that company to build the product, and therefore you're expecting profit based on their work. And that's when it gets into a security. You've put money into someone else's hands, and you're trusting entirely in their effort to make you more money, or at least not lose your money. You expect them to make you money. And that's when the government wants these companies to disclose what it is they're doing, all their financials. You know, if you're on the stock market, you have to do your quarterly reports, submit those. You have to show where the money is going. And, you know, if the ICO owner goes out and buy a Lambo, that would have to be accounted for. And, you know, they're held responsible to the people that gave them money. And I think with the orange groves, same thing. It was, like you said, not the oranges that were securities, but it was the fact that they gave their money to a different entity, a farmer, to make a profit. And that's when it creates this security type thing. So I think it's been well established that doing an ICO in that respect is going to be a security. Now, what about if it's sold on an exchange? Like if you're buying Bitcoin on a exchange like Binance. Now we've said, or I think it's pretty well understood that Bitcoin itself is not a security, but does buying it on an exchange that looks and feels like a stock market, does that create a security in that economic reality? That's not something I think a lot of people have focused on in the sector, but to me, it kind of, well, I don't want to get, I don't want government regulation on it, a lot of this, but if we're using the same logic, I would think that that also does kind of create a security.
Yeah, it's true. I mean, if I take your logic and I say that I want to make this example that I don't know how, but I put my house in some kind of a certificate and I start to trade it on an exchange.
Mm-hmm.
So definitely the house is not a security, but the way that I trade it, and the buyer thinks that it will raise in value, maybe. So definitely it's could be something that you also have to take into account. Yeah.
Mm-hmm. So I think that that economic reality, it just looks at whether the person's buying it, if someone else is going to make them a profit. I think that's kind of the crux of it.
Yeah, and also like people say that the prong with the what is it that's with the effort of the management or something like this.
Mm-hmm.
So many people say that this is not met, but I mean, who actually kind of contributes in a cryptocurrency project, even if it's like open source? I mean, so few people actually write code on it. So I think it is like so obvious that these are all securities.
Hmm. I agree. I don't want to agree with you in a sense because from a personal perspective, I think it was nice having the ability to buy and sell these things without so much government involvement. And in what, it's a different way of raising capital for the ICO founders. And when I first learned of it and explored it, I thought it was great, and I thought it was a better way for people to raise money than having to go through the cumbersome process of selling out a big chunk of your company to some kind of venture capitalist that might not have your vision or your skill and might steer you in the wrong direction. But now, after taking more time, time has passed and we've seen what's happened with it. I think unfortunately that it might be right that we need some kind of regulation in that environment because of what we've seen. The incentives just aren't lined up for success with an ICO. And I think it's overall has a negative impact on the adoption of Bitcoin if all these people that bought the ICOs ended up losing a ton of money because they essentially gave their money to people who exit scammed and didn't follow through on what they thought they were buying. Then it might turn them negative against cryptocurrency in a whole, where they might not understand what they bought was completely different from what Bitcoin itself is. But
Yeah, but don't you think that this would actually make Bitcoin even stronger? Because the market, like with this magic hands, would self-regulate itself. So all these altcoins go away, and just Bitcoin might be the only one left.
yeah, I mean, that could be what happens. And I hope that is, well, I don't hope that all the altcoins fail because I know they're not all bad. Like there's a lot of people trying, spending their life savings and all their brain power and, time and effort to make whatever their project is successful. So they're not all, hopefully not all doomed. But the economic realities of it might, we'll see. Like there wasn't just one internet project that ended up successful in the end. We got quite a few. So my hope is that a lot of them do work out. But I know a lot of very smart people, and it sounds like you're of that opinion as well, think that it will just end with only Bitcoin reigning supreme. And I love Bitcoin's my, you know it's I'm a big proponent of Bitcoin itself. I've met so many people that I like that are working on these kind of projects that are not scammers, and I don't want to see them fail. Is kind of why I still hold out a lot of hope for the other things beyond just Bitcoin. And I don't know if Bitcoin would have got all the attention that it got last year to get that spike in the price without all the ICO craze happening at the same time. And, would Bitcoin ever get to mass adoption without all the attention it got from the ICOs? I'm not sure. And whether or not Bitcoin gets mass adoption or not, I think it still works whether the price is at 20 or the price is at 1,000. It still works the same way. So it's a better store of value for people when the price is at 20, but for people that are using it actually for remittances or any kind of payments, it's better when the price is low. So I guess there's two sides of it.
This is so true. Yeah. I mean, we should. I mean, this is what so many people say. We should stop looking at the price, but actually, we just keep doing it.
Hmm.
But taking one step back, I'm not a Bitcoin kind of maximalist. So I do think that there will be many projects that actually have strong use cases and that will survive. But my kind of favorite thing is of course Bitcoin, right? But
Yeah.
I'm not just like this will be the only one. No.
I'm with you. Yeah. But I also I don't like that a lot of these ICO people scammed everyone either. Like that's, there needs to be some, it's good that we have some other projects that are trying to figure out better ways of doing things, and, anything that can be done more efficiently is good, but it looks like so far we haven't figured out a more efficient use of the blockchain than the use being used for Bitcoin. But who's to say that that's not going to happen in the future?
Yeah, true.
Now, so one thing, so in America, we are saying that we can sell ICO type securities, but it has to be limited to accredited investors. So you can do a Reg D offering or a regulation crowdfunding offering that actually doesn't even need to be limited to accredited investors, but it has to be done through a crowdfunding portal that's registered with FINRA. It's like an arm of the SEC. So what do you think about that, about limiting these things from to sophisticated investors if you use the Regulation D type of approach?
Actually, I don't like it at all, because in my kind of understanding of crypto, it is that everybody, like regardless of its nation, regardless of its race or anything else, should be able to engage in this whole cryptocurrency space. So I don't like that you try to make something where only like the top 1% of the world is able to get in. I don't like that at all. So I think this is actually terrible. And also, like with these exchange traded products that try to get accepted, I mean, sure, there's a higher probability that this one will get accepted because of this, but I don't, or I hope that this won't be like the future, because everybody should be able to get in.
Mm-hmm. I agree with you there. I mean, the argument on the other side is that the people that are sophisticated or accredited should know what they're buying, so they, and they can maybe take on the risk better than someone who needs their money more to get by on a daily basis. But I think everyone is able to come to those decisions on their own of whether an investment is good or not. Anyone has access to the internet to make the purchase, also has access to the internet to do some research on it. So if they do end up getting scammed, it's the information is out there that they could have found to make a better choice. But
Yeah.
and it's kind of like a some people say it's your introduction to crypto. Getting scammed is like your training belt. But it's like just something everyone has happened, but it doesn't stop people. Like you get scammed once and then you learn, and there's no interest like self-interest. So if it happens to you, that's the best way to learn the lesson rather than just learning it from reading. So
Yes, it's true, but I mean, like everybody is able to read, so everyone can like do it self assassination whether this is a good investment or not. So this is why I said in my article that we need like some kind of best practice kind of white paper, so that every white paper has like the same standard that it is written, so like people can make smarter kind of decisions, right?
I really like that idea. Just have, certain sections that every white paper adheres to. And I think of the prospectus on the stock market, they kind of all look the same. They have the same, feel to it, and you can go to the same section to get the same information. So yeah, I think white papers being like that would be good, and to have some meat in them compared to a lot of it is just fluffy marketing material right now. So you had a lot of stats in your article. Do you want to maybe go into them a little bit?
Yeah. Let me get it on my screen. So now here. mm, this was a research paper. It's called the ICO Gold Rush, and they examined 450 white papers.
Wow.
So for me, the most interestingly was that they found these white papers that they saw had inadequate disclosure of the things that they wrote down. So shockingly, like only one third mentioned the law applicable to the ICO. Also, in one third of the sample, they were not even able to find the entities or promoters' origin country or even the people behind the project themselves. So, also in almost 9 of 10 white papers, there is no information at all regarding the regulatory status of the ICO. So it's insane. And in about, I think,
I think
every
that
fourth,
that's a challenge too, because Munchie, that's what they got in trouble for, was for saying that they were a utility token and they passed
yeah,
the Howey test without giving
yeah, yeah,
adequate. So I think it made
yeah.
people not want to put that for fear of getting it wrong.
That is actually true. I mean, you don't want to write something down that you can be proven it was wrong afterwards, right?
Hmm.
So, of course, it's like wise, but I don't think that the bunch of the findings that this research found is a very nice information that you want to base your investment
Absolutely.
decision on,
Yeah.
right? Yeah, and also there was a huge percentage where they didn't even say where they want to put the raised funding. So it seemed that even the people that start a token sale, they don't even know how they want to, like, we get this kind of capital, so we kind of do 10% in here, 10% in there, and so on. So
Hmm.
there was no data on this in, I think, every fourth of the white papers.
Yeah.
So
I think
we get the idea that it's really horrible, and we need some kind of standardization for those white papers.
And with the nature of it, if they said, it would be interesting if they said, okay, a certain amount is going to go to salaries and we're going to put it in this wallet and we're going to distribute it monthly. And then people could go and look and see that that's happening. And then if they said this amount is going for our office rent, this amount is going for the technology, to purchase X amount of computer technology equipment, this amount is going to the owner's travel, that they go to certain conferences, and then people could feel comfortable to even log in and look on the blockchain and see, oh, that's what they're doing, what they said they did, but there's nothing like that.
Yeah, exactly.
Hmm. And then you said 85% were silent on whether they'd be pooled or segregated.
I don't know about that anymore, but they just found like so many things that were just shocking, that you base your investment decisions on just like a PDF paper.
By
Let it
complete.
have 5 pages, let it have 20 pages. It doesn't matter. It's most of them are just garbage. Of these 450 white papers, most of them were just garbage.
Yeah, it's like we made Bitcoin to be trustless, and then in the ICO arena, we look at these white papers and trust whatever they're writing in there. When it turned out, I've heard them described as being memes. Like every white paper, it just should be called the meme for the project because there's no accountability on them. So, but on the flip side, I know people who have spent hours, more than just hours, but really, tried to come up with a very intelligent and explanatory white paper that would account for things. But it's also hard when you're at the beginning of the project. Sometimes you just don't know the answer to a lot of the things that a seasoned company that's been operating for a few years would know. Like, you have no idea what your sales projections or any kind of projections are, because a lot of these companies haven't formed yet or haven't done any of the work that they're talking about yet. So it's hard to really put any numbers
Yeah.
in there.
Yeah.
And that's just the nature of doing, raising the money before you've got anything built.
Yeah. While this is true, I try to compare it with the traditional VC space, right? So if they want to raise VC capital, they have to make something called a business plan. And in this plan, you have two parts. You have one part that is more of all the qualitative data, and then you also have a quantitative part. And in the second one, you need to make like what you think this is going to be my financial statement. So you need to make some kind of assumptions, but you have to do it. So it is actually it is possible because it always was like this.
Mm-hmm. Yeah, yeah. And so, how would you propose bringing more legitimacy and less exit scamming to the space?
Well, as I just said, I think we need like standards for the white papers, because the best papers that I personally saw where they had like multiple white papers. There was like a short one, then there was one that focused more on the technological stuff, and then there was actually one that was like I think it was called mathematical white paper. So for every type of kind of investor, you had a different white paper. I think this is a little bit too much, but it's the right way that you need to kind of try to provide as much as data and information that you can and share it with the general public so that they know what am I putting my money in it. So we definitely need standards how to write a white paper.
Mm-hmm. Yeah, I agree. Um, and I really liked also your section about the moral hazard. You in reference to Mr. Hinman's statements. Can you give like maybe just elaborate on that a little bit for everyone?
Yeah, sure. There was something, the key statement of the published speech was that the categorization of a token sale can change over time, he said. So while he clearly states that a token sale is most likely classified as a security, he then says that a digital asset can over time change its classification from a security to something not a security. And this would be the case if the token gets sufficiently decentralized and serves utility function. So now we have like three topics. It's one, the digital asset; two, sufficiently decentralized; and three, the utility function, right? So starting with digital asset, I was quite entertained by the wording, because when you look at the tokens out here, you realize that there are not digital assets. They're rather a promise. So ICO people that give their money, they're sold the argument that a digital asset will be deployed at some point in the future. But okay, for the other topics, let's suppose that they are digital assets. They have been built like big platforms where the ICOs are built on top of. And then we go to the second one, that was the decentralization problem. So he says decentralization is where you don't have any central company that you put your money in. And then he says, as of today, except of Bitcoin and ETH, that nothing is kind of decentralized, right? So, I mean, he gives you 3 facts: digital assets sufficiently decentralized, and then the utility function. So if you are a scammer, you would just put these 3 things out there, constantly try to propagate it, write it in your white paper, constantly tweet it, constantly publish it. And then people think, okay, this is meeting what the guy from the SEC said, so it's a good investment, right? So this is what I call is causing moral hazard, because it kind of incentivizes scammers just to put these 3 words and constantly try to publish it.
Mm-hmm. And yeah, it's another one of these things too, where what is sufficiently decentralized? And listening to some technologists talk about Ethereum, they were saying that the SEC probably got it wrong, that Ethereum is not actually decentralized. We saw it by the fact that the DAO was rolled back. If someone has the capability to roll that blockchain back, then that's not a decentralized thing. So, the word decentralized has so many different meanings to different people that any project now, I think, that issues an ERC20 token at the beginning can somehow think, okay, well, if it's on the Ethereum blockchain, that's sufficiently decentralized, so that means that my token is likewise sufficiently decentralized to not be a security. So I think that was kind of a dangerous statement for them for the whole ICO space. If we're, which I think we are, in agreement that well, I don't know. I find it really hard to agree to the fact that I want the SEC to have full jurisdiction over all ICOs. Like, that's what my logical, looking at all of this, if we're going through the Howey framework, everything like that, then yes, they are all securities, and they shouldn't be securities at one time and then sufficiently decentralized to not be at another time. It's just so confusing and opens up so many doors for people to work around it and try not to. But I think that's kind of where we are with the space right now. And then so how do you think we should go forward from here, I guess, is maybe like the wrap up. You said more disclosure on the white papers, and what else?
This is the last section of my writing, where I say that I hope that we will see a second wave of the token sales that I call ICO 2.0. And for me, I see it that token sales need to register with the financial oversight institutions. The only remaining question for me is, do they need to register in every country that they try to target, or just with the institution where they're from?
Mm-hmm.
Because in the European Union, we have something called a European passport. So it is sufficient if you register in one state member state, and this is fine. So then you don't have to go to all of the other member states and register there. So I hope that actually there would be a solution like this, because I just think it's not practical for a young startup to go with lawyers to each country and try to look, am I classified as a security in this country and in this country? This is just, it would be a mess, right?
Mm-hmm.
But yeah, but as I said, I hope that ICOs that the token sales start to be a registered token sale, and then that's it. That's
I
fine then.
wonder, I wonder if we could make some kind of global standard where they just have to register with some kind of ICO oversight place, and then every country has the same process for it. But I
Would be awesome. Yeah, this
don't.
would be like the first best thing, right? But it will be so hard that we reach some kind of consensus in a global way,
Yeah,
because
yeah.
each state has its own habits, you know. So that will be very hard. But of course, it's like the best, like the best thing.
Mm-hmm. But But yeah, it's this has been very educational for me. I really appreciate your time and your insights, and I hope you keep teaching your students over there and keep writing, and we'll get to the answers to a lot of these things that are starting to come up with people like you thinking about them and researching on it.
Yeah, thank you very much for giving me the chance to speak on your channel, because I really like your work that you do.
Well, thank you.
It was very fun, and I hope that we can do it another time.
Oh, yes, great.
So
I'd
thank
love
you
to
very
keep
much.
doing this every, once a quarter or something like that.
Yeah, thank you
Yeah.
so much.
I just wrote in my Telegram, I have a little group from some people I met at a meetup in Florida, and we called our Telegram group the Fork Chat because we went away from a bigger group and it's just a small group. And I said, I really lucked out with you. It feels like I'm interviewing, someone like Andreas or someone of intelligence
No,
level, because I think you've thought about all of these issues from a pretty deep level. And I really, really appreciate your insights. So thank you so much.
thank you, Sasha. Thank you.
All right, you have a great day, and anyone that wants to follow, the Twitter name will be in the comments of the YouTube and SoundCloud post.
All right, cool.
Thank you.
So, see you. Ciao, ciao.
Bye.